Hey guys, what's up and welcome to a brand new series we're calling What's Happening? A series where we deep dive into the biggest happenings of the crypto space each week. This week, most cryptocurrencies were in the red while more companies entered the NFT and metaverse space. And perhaps one of the most talked about pieces of news was OpenSea's on again, off again, IPO, and then the anger it generated from the crypto community after that, and how quickly they backtrack on their words. Alright, so let's take a closer look at what's happening. Awkward. So a couple of days ago, OpenSea, the beloved NFT marketplace, hired a new CFO, and this is the same guy that helped Lyft, which is Uber's biggest rival in the US, to also go public.
Like a one-trick pony.
Really? So when
like the meme guy that slaps.
The water leaking and then the So after the hiring, he made his first public statement and he basically angered all of OpenSea's users all at one go. So to make a big statement, Mr. CFO man went on to say that it would be foolish for OpenSea to not go public, hinting that the NFT marketplace might opt for an IPO instead of issuing its own tokens. Now, it's a little bit of a strange one. So back in the day, IPOs were seen as something to be celebrated, right? Like whenever there's a startup from your own local town that managed to IPO, it feels like, wow, this is the pride of the nation. It's a rite of passage for beloved startups to transition into something serious. However, this was met with almost widespread backlash from the crypto community. Before we dive in, let's take a step back to explain why. So when the valuation of a startup grows, the means of raising funds also grows with them. That means that they might start off with seed capital or several rounds, they're usually named like Series A, B, and C. These are usually funded by venture capitalists or angel investors. Now, when the valuation grows, these early investors and the founders themselves will want to see some return on their investments. So they look for an exit strategy. It's a real thing, I don't know why I did that. So traditionally, right, these shareholders would have two means of liquidating their stocks. Either by getting acquired by a big-ass company like one of the FANGs, or by publicly listing so that people can buy it. Mang, what's M? Meta. Mang. In the crypto space, however, this is rarely the case. You see, the allure of crypto has always been about decentralization and giving power back to the masses. So while IPOs were largely celebrated in the past, it comes across as a quick cash grab for the few. What most crypto or blockchain companies have done in the past, especially in a way to reward their early users, again, going back to rewarding users instead of just the owners, is that they will go through an ICO or an initial coin offering. It's similar to an IPO, but with the ability to set aside some tokens, probably something like 20 to 30% of it, to be airdropped to people who have been interacting with the platform early on. A recent example of this was ENS, the Ethereum name service, where most people who bought the ENS addresses for themselves were able to make almost 5 to 6 figures worth of crypto thanks to the airdrop.
Like you.
Thank you. And going back to the whole spiel about decentralization, ENS also announced that it will transition to become a DAO or Decentralized Autonomous Organization, where token holders will be the ones to make decisions about everything that's going on in the organization. So airdropping tokens to active users equals giving users who made the organization what it is today the power to decide where it ends up. You can see how that's quite beautiful, right? So back to OpenSea. For some context, OpenSea was founded in 2017 and is one of the largest marketplaces for NFTs, with the Bored Ape Yacht Club and CryptoPunks being some of its most notable collections on its platform. OpenSea has handled the lion's share of NFT trading on Ethereum, hitting a record transaction volume of 3.4 billion during the height of the NFT mania back in August. And now it offers more than 80 million different NFTs to 700,000 of its users. Many people were anticipating some form of offering in the works, and many users were hoping that a token airdrop was on the way. So you can imagine why news of an IPO was met with a, whoa, hold on, what the is going on here? A Twitter user going by the name of Punk2070 also wrote, "It sucks to hear that OpenSea is selling out and doing an IPO. Their VCs didn't get them to where they are today. We did." Another user, BAYC2745, was also of the opinion that an IPO isn't the right play for OpenSea's future. The success of a marketplace like OpenSea is built upon its users and its community. So there's an argument there that a token airdrop to reward early users could have been more valuable to OpenSea than raising equity. But it's not just about reward. If OpenSea goes public, traditional rules that slow down innovation will also kick in, and the company is likely to move into a more corporate-like governance structure where shareholders have voting rights deciding on the future of the business. And this is very different from decentralization and Web 3.0 organizations where the community has the right to influence actions of the company. And as we move towards Web 3.0, models that encourage community involvement and ownership will emerge as the winners. So after all that hoo-ha, Mr. CFO man of OpenSea probably realized that, and he took to Twitter to backtrack his words, saying that the company is not planning an IPO as of now, and they will look to involve the community if so. Mr. CFO man, I should probably say his real name, it's Robert, right? Robert said that it was inaccurate reporting about OpenSea's plans, and that there is a big gap between thinking about an IPO and actively planning one. So while OpenSea's IPO doesn't seem to be happening anytime soon in the future, it has opened the door to interesting conversations about the trade-offs between fundraising and community in the world of Web3. On one hand, going public and setting up corporate governance is a proven system. But on the other, especially since we're still in the adoption phase of Web 3.0, it probably is more worthwhile to prioritize a land grab than cashing out. And that's all we have for this week. If this was helpful in any way, I hope so lah, please give us a sub and a thumbs up. And if you haven't already, do join the Chain Debrief community on Telegram where you get insights, you can ask questions, and you can also share project drops. And if you're shy, you can just hit the chaindebrief.com where we have all the information you need for cryptocurrencies. We'll see you in the next one. Bye-bye.